This week's market update is basically looking at the numbers of 2024 so we can project towards 2025. And if you look at this slide right here, it's got the inventory and sales. Inventory is the blue bar, sales are the green. The benchmark price it's similar to the average price, but it shows you how the price goes up and down throughout the year. And what we saw in 2024 was a typical real estate market, just like a bell curve. At the beginning of the year in January, sales were low. They gradually rose up until the summertime, June, July, and then they started to go down again till here we are right now, end of December, beginning of January. That's the traditional bell curve that we see in the sales in a traditional real estate market. So we could say we were almost there. The one thing that differed was the inventory. Because of rising interest rates over the last 3-4 years, our inventory got very, very low and then started to creep up at the beginning of this year, finally. And we saw come September and October, very, very high inventory levels relative to years past. We're nowhere near where we were 10 years ago, but relatively our inventory levels are high. You're seeing them start to come down as the winter starts to progress. They might go down a little bit more into January, but we're going to see the traditional bell curve come back in February, March, and that inventory levels and the sales will both go up starting next year.
Yeah.
Starting this year. We're in January.
And for new people to the city, average inventory, Tim, when we started for many years was around the 5,000 to 6,000 range. And we only held that rough. We just got to it in September and it lasted just a few months, a couple of months there. So what did that look like for us in the beginning? Everything went into multiple offers because there was no inventory. People paid $100,000 to $150,000 over list price. It was crazy. And we kind of held back. We looked at that craziness and sure enough, those prices have come back, Tim. So you have to be aware of what you're buying. We're not saying when we're at the peak in June here that it's a bad time to buy. All we're saying is that investors have to be very, very selective and they can't get caught up in the emotion. And that's why we host these seminars every second Tuesday, just because we don't want you to be caught up. Even with our client, Jesse, he just bought Tim in Aspen in December.
Yeah.
And Tim bought him a townhouse up in Aspen and he rented it out, got top dollar. The property's cash flowing, but he waited and was patient. And now he wants to turn around and do a burst strategy. And we're telling him, look, you have to be very, very selective on the burst strategy. And for the new people out there, the burr is when you buy, you renovate, you refinance, and then you rent the property out, and then you repeat that. And the reason why we're doing that with Jesse is because his money's tied up in real estate, and you want to get that money back out as soon as you can and keep going, okay? And as you can see on this graph here, if you're buying before really, Tim, end of March, that's when the market really took off, you reap the rewards. And if you're buying correctly, in the right communities, and that's what this topic's all about, you're going to do very, very well. And for investors out there, some of those properties went up $100,000 in a short period last year, right?
Yeah, and that's on top of $100,000 in 2023. So if you got into the market in the last couple of years, you've reaped some great rewards, but we don't anticipate an end to this for quite some time. Now, we're not saying it's going to go up another 100,000 in 2025, but you're going to see significant gains.
Yeah. Okay, let's go to the next slide.
Okay, the next slide shows sales by price range. Now, we'll dig into this a little bit. It shows you going back to 2021. You just look at the colors of the bars. 2021 is blue, and then 2024 is the red one on the right. If you look at the lower end price range, especially below $200,000, you see tiny, tiny little sales for 2024. That's because our prices have gone so high. There's almost nothing for sale under $200,000. Same thing for 2022, or sorry, same thing for the next price range, 200 to 299. Our sales for last year are below the 3 years previous. But when we start to get into the higher end homes, 600 plus, 700 plus, you're seeing those sales start to outpace the years before. And that's because not only did the price range shift because there's more and more higher end homes because of the price increase, but you're also seeing relaxation in mortgage rules.
Yeah. Yeah, and Tim, in saying that, you're going to see this continue into 2025. It's very, very exciting. So properties 600,000 and above, they're going to be moving and they're going to be going up in value just because of that. And Danielle can touch on this when she gets on in a second, but the mortgage rules change when you're buying upwards over $1 million with the amount of deposit down, the qualifying ability. So that is going to spur people on, coupled with interest rates dropping. So it makes it more and more affordable. And we're very happy, Tim, because there's a sweet spot when you're investing in real estate to cash flow. Right now, Tim, we're not looking at properties over 650,000 because we know the max yield of rents out of a suite of property is around $4,000. And if you go over the 650, it won't cash flow. But with interest rates coming down, that will push that price point up further. So it's a very, very exciting time for Calgary. And one last thing I want to talk about the market, and I know people might find this funny, but we did get a call today from a client about Donald Trump and everything that's going on there. We honestly don't feel at all. We actually feel Alberta's in a very good position. And why don't you tell them why, Tim?
Yeah, the economic indicators and the potential tariffs that Trump says he's going to put on Canadian goods. Well, you have to understand that it's Eastern Canada that produces most of the goods in Canada, and it's Western Canada that produces most of the raw materials. For instance, oil and gas, if he put a 25% tariff on Canadian oil going into the States, the price of gasoline in their car at their gas stations would go up by $1 to $2 a gallon immediately. So the American electorate would have there would be a large outcry from them because to see their gas prices go up that much because they're using Canadian oil in their refineries in the northern states. We don't see Trump doing a universal tariff, whether he puts them on at all. So Western Canada is in a better position than Eastern Canada on this threat from Trump. But another thing we have to say is Donald Trump's a lot of bluster in some cases. We don't think he's going to destabilize the Western Hemisphere. It's not in America's best interest to do that. You'll see a lot more negotiation come from Canada. And we think that at the end of that, it's going to be better off for both countries.
Yeah.
We're both going to prosper. So
and
stay tuned.
Yeah. And if anybody is going to be affected by all of this, Ontario is the one to look at. And that's probably why Doug Ford is in charge of fronting all of this, because they've got the most to lose. And guess where a lot of people moved from and came to Calgary or Alberta this year, well, last year, was Ontario. So it can only help our city, our province, and we're not even worried about that. We did have a client reach out to us today, so we wanted to put that out there.